Next, we're looking at business processes and decision making. And again, I remind you that these introductory videos are not complete. You are still responsible for everything that's in the textbook. But looking at this, we're first asking, what is a business process? The business process is a series of activities and tasks or steps designed to produce a product or service. The business process then, this is the day-to-day of what a business does to operate. This is also sometimes referred to as a business system. So an example of this is inventory management process leads to the manufacturing process. So we're going to get the raw material. We're going to turn around and manufacture that into a product. That product is then going to be sold, and that process then goes to the customer support. One activity leads to the next, leads to the next. This is the business process that you're going to be doing in your day-to-day activities. So this business process, sales and inventory elements are often considered part of the supply chain. Looking at this then, we're going to be managing inventory. This is a business process, the goal of ensuring enough inventory to fulfill customer requests, but not to have so many goods that it would spoil. For example, if your company makes coffee cups, and you're sitting there and you're making these coffee cups for Tim Hortons, how many coffee cups do you make? Well, you're going to be looking at what is your monthly supply. How many of these is Tim Hortons ordering? If, say, for example, they order 1 million cups a month, you want to make sure that you've processed enough and you've got enough in your warehouse to turn around and fulfill that order. But you don't want to make 2 million cups. If all you're selling is the 1 million and you produce double that amount, you've got to worry about things like where are you going to store the excess cups? What are you going to do with them? You can't just put them out in your parking lot. You can't just leave them to rot. So you're going to have to incur an extra expense of storing them until they're sold. If you have excess inventory like that, what are you going to do then with the process of production the next month? Would you stop production? What would you do? So managing inventory is extremely important in running your operation. Inventory management balances then the demands of the customer with the inventory purchased. Likewise, if Tim Hortons wants 1 million cups of coffee, 1 million coffee cups per month, if you only produce 500,000, again, you certainly don't have warehouse or storage problems, but you certainly have a problem on the other end because the customer is not going to be happy you didn't fulfill their requests. So what's a business process consist of? It consists of activities and resources, the facilities and information to do a business. What do these mean? The activity. Activity transforms a resource and information of one type into a resource and information of another type. An activity then is transformative. That's the whole idea there. The action has a purpose to be done. This purpose is going to be transforming a resource and information into something else. It is going to follow rules and procedures. If you're turning around and making coffee cups, there is a specific way and method you're going to use to create and produce these coffee cups. This can either be manual or automated or a combination of both. So looking at this, an example is payment, which is an activity, transforms the information of quantity received and shipping invoice into supplier payment or resource. So we're looking at this. What is the activity? Your activity of accounts receivable, what you want to do is, or accounts payable, no, accounts receivable. Sorry. Your accounts receivable then, that activity, what is that doing? Is that's getting payment. That's getting a resource. How do you get that payment? You're transforming quantity received and shipping invoice into supplier payment. Looking at this, the resources, they have items of value. A resource can be external to an organization. It's not just a resource that the company has. It can also be external. An example of this, cash is a resource. The company having cash at hand, and not actually physical cash. Actually, I'm talking about having a positive margin. This is the idea that you have a liquidatable asset of money that you can use. Your workers are a resource. Looking at this, it's probably one of the most expensive resources that you have. Your salaries are probably going to be one of your highest costs going out there, but you're doing this to create a resource. Think of your company without the workers, what could be produced, what gets sold, what would ever get shipped. The workers obviously are an integral resource. Your customers are also a resource. This again is external to your organization, but it is a very important resource. Your customers are something of value. Think of the fact it costs 8 times the amount of work to get a new customer than it does to maintain an existing one. So if you lose a customer and you have to replace that customer because obviously you need to have the same number of sales, it's going to take 8 times the amount of resources to do so, to get that new customer. So it is much more efficient to keep your customers happy, keep them current, and than it is to go and try to find new customers. Your suppliers are also a resource. You need raw material to create whatever product it is you're producing. This product cannot be produced without a supplier. You want a supplier that is reliable, is going to give you a good raw material at a reasonable price in a reasonable amount of time. You find someone like that, and that is definitely a resource to your company. What facilities are we talking about? Obviously, the structures used within the business process is one of the facilities. You're turning around and you are creating coffee cups. You're going to need a building in order to do this. Your resources can be stored within these facilities. The resources, the list that we just mentioned above, the ones that are internal to your organization, are obviously stored or used within these facilities. An example, your factories are going to be a structure. The equipment inside of these is also going to be a facility that your company has. Your inventories, how much product you have on hand to sell. Do you have enough that if more customers buy, you're going to be able to meet that demand? Just think how important this is. You go and you buy a product. You go online and, oh, I really want this, and you find this item that you really want, and you go to checkout and it says, yes, will be delivered on 3 months from now. Well, you're not going to be very happy, and you might turn around and actually cancel the sale. Maybe go look for the same product that you can get in a quicker time frame. So looking at this again, your inventory is very important. You don't want to have too much that you're worrying about storage problems. You don't want too little that you're not going to be able to meet the demand of your customers. Your database is a facility. This is something that you're going to be using in order to run your business process. Information. And again, what's the most important resource that a company has? And I know I say this a lot of times. I'm always amazed because obviously this is always a question that's on the final exam. And I'm always amazed by the fact that there is a number of students that miss this question. And I don't understand. I don't know how many times I say this because, again, this is how important it is. Your company, its number one resource is information. Without information, your company is not going to be able to make intelligent decisions. So what's information? It's activities uses information to determine how to transform inputs received into outputs produced. Basically, again, a whole bunch of words that simply say what you need is you need to be able to make intelligent decisions. How do you make intelligent decisions? You have good information. Information created in a process is a key focus of this book and this course. This is what we go on about, is the fact that we talk about computers in business. When you look at how computers are used, most of it is really centered around the idea of somehow implementing information in that process. The business processes also create information. As you've seen, as you've been growing your company, as your company's been evolving, it creates its own information. When I talk about tracking everything, the more that you track, the more you can transform into information. The business process modeling notation that's a standard used to document the business process. The BPMN is the idea that what you want to do, is there a way of not reinventing the wheel, but how do I know what data to track and what I'm going to do with this data? That's what the business process modeling notation is going to help you do. So what is information? Information is knowledge derived from data. And again, looking at this, you take the raw data, you change that into information. Information gives you knowledge, gives you action that you're going to be able to work on it. Data, nothing more than recorded facts or figures. How much do you earn per hour in your industry? That's data. Turning around, and what's the average hourly wage of your industry? That's information. So give an example of how this is used. For example, my own business, I've got a development company, and what I have obviously is computer developers. I've got computer programmers. Now, what do I pay them? If I look at every individual employee, I know what I pay them per hour, and that's just data. I turn around, I look at the industry standard, and I see what is the average pay for someone in London, Ontario to do computer programming. So a good developer in London is making approximately $50 an hour. So I turn around and I take this data and I change this to information. I turn around and I start my developers out at $75 an hour. By doing this with this data, I know that I'm paying them above the industry standard. And because of this, they know I'm expecting that much more out of them. So looking at this, the data of what each individual one gets paid is turned into information. This information then is knowledge. It's something that is actionable. By me increasing what I give my developers, I'm turning around and creating a different business process, a different model. Data then is presented in a meaningful context. By changing data information, then what we have is not just a series of facts, we now have information that we are able to use. So what is information? Information is processed data. So processed data by summing, ordering, or averaging, or grouping, comparing other similar operations where we do something to produce information. We are turning around and all of this, again, another long-winded way of saying we are going to manipulate, we're going to process the data and change that into information. It's a difference that makes a difference. Looking at this and saying, wait a minute, am I using data and is that going to be useful, or am I using information? This difference makes a big difference. If you get new information and it does not make a difference in your decision, did you really receive any information? If I turn around and I find out the fact that now the average salary in London is $75 per developer, I get this information and do nothing with it. Is it really information? Have I learned anything? So characteristics of good information, obviously it must be accurate. If we're going to go and we're going to accumulate data, this data has to be accurate. It's based on correct and complete data and processed correctly. If I turn around and I ask all of you for your date of birth, because what I want to do is change that data into information. I want to know what the average age is of my class. I do this by asking you for data points, what is your birth date? Obviously, this data has to be accurate for me to create the good information. If all of you send me the wrong birth dates, or I turn around and you give it to me in year, day, month, and I try interpreting that as month, day, year, I'm going to turn around and that is not accurate data. This is crucial for management because seemingly accurate data can be incorrect. Cross-check information to ensure accuracy. Never just assume it's correct. Data must be timely. If I am turning around and I need to know, for example, I'm working on the plans for next year. I make coffee cups and I want to know next year how many coffee cups am I going to produce per month. What I want then is I want to get the data of how much did we do this year. If that data doesn't come to me until February or March of next year, it could be as accurate as it wants to be, but it's not timely, so it's not useful to me. Is it relevant? If I'm turning around, for example, and I want to know how much dry breakfast cereal was sold in North London in January of last year, if I turn around and the data that I then accumulate gives me all the people that went out for breakfast during the same period of time, that's not relevant to the question I was asking. So the data has got to be to the context of what it is I want to know. It has to also be to the subject. If I'm asking for dry cereal, giving me people that go out for breakfast is not to the same subject that I'm asking about. Other characteristics is just barely sufficient. This comes down to the fact that just enough. Too little isn't good, and too much is equally not useful. If I want to know about the dry breakfast cereal sold in North London in January, and somebody gives me the stats for the entire year for all of Ontario, it could be accurate, it could be timely, but then I am drowning in data. I'm drinking from the fire hose, and again, it's not useful to me. So sufficient for the purpose for which it was generated, but you don't need additional extraneous information. And being able to know the difference is very important. Knowing what information to ignore is difficult. Oh my gosh, I have a wealth of data. Lucky me now knowing, wait a minute, I need to now surgically remove all the data that I don't need. I need to know enough to be able to do that. Is it worth its cost? If I am turning around, for example, and I want to know all the dry breakfast cereal sold in North London, because what I want to do is know, do I increase my sales, my advertising in that area, or do I decrease it? I need to know what the cost of the data is. So if this is going to increase my sales by 3%, meaning that I'm going to increase my profit by $20,000 next month, and this data cost me $50,000 to collect, then this data, no matter how accurate and sufficient and timely, is still not going to be a worth to me because it costs more than what I'm going to gain on the other end. So knowing exactly how this data is going to be used and what the outcome is very important. Information systems also cost money to develop, maintain, and use. Is it worth it to me to create a customer management system? Am I going to be able to get enough benefit out of that that's going to represent the cost being justified? So it must be worth the cost. Otherwise, if you're doing it just to do it, or you're doing it because you heard it was a good idea, and you don't investigate, is it worth the cost? Again, you could be just throwing money away. And this ends part 1 of our discussion of business processes.